Hello, good morning, good afternoon, or good evening, everyone, wherever you are from. Today, I wanted to just give you guys an idea in terms of the overall Canadian demographic and the wealth distribution within Canada, how it is laid out overall. This quick presentation is just going to talk about the um, overall investment landscape, Canadian investment landscape. So we're primarily focused on that. And what we are seeing from historical levels is that Canada has quietly become one of the wealthiest nations in the world on a household basis. But over the last 3 decades, what we have seen is the household net worth has expanded dramatically due to four structural drivers. Okay, one is the long-term appreciation in residential real estate. The other one is strong performance of public equity markets, particularly US equities, because as you know, a lot of the Canadians do invest on US equities or US listed equities in Canadian markets, and growth of employer pension plans and tax advantage retirement accounts such as RSP and TFSAs. And what we have also seen in the past decade is a tremendous growth in the population now based on the um, uh, uh, immigration changes. But it has changed recently. There's a lot of change that has happened in past 2 years. But historically, if you look at it from past 10 years or 15 years, there is definitely a huge population growth based on immigration. Okay. By the end of 2025, Canadian households collectively held approximately 18.6 trillion in net worth, which is nearly close to 12 trillion in financial assets alone. So financial assets have now surpassed the non-financial asset, which is primarily the real estate. Okay, most of the people think that the real estate is the majority of the GDP in Canada, but that's not the case. Okay, marking a structural shift in household balance sheets. So this wealth, however, is highly concentrated, according to the latest estimates from the Parliamentary Budget Officer, the PBO. If you look at the overall wealth segment, the top 1% basically accounts for almost 24% of the share of Canadian wealth, whereas top 10% is almost 53, top 20% is close to 70%. And if you look at the middle 40, which is around 27%, and then the bottom 40% is around 3.3%. These figures indicate that roughly one-fifth of Canadian families control more than two-thirds of the overall household wealth. Okay, this concentration has profound implications for Canadian asset managers, so, private banks, ETF providers, financial advisors, pension funds, family offices. So understanding where the wealth resides and how or who controls the investable asset is becoming increasingly important for capital allocation, product design, and client acquisition. Um, if you see from a household balance sheet standpoint, if you look at the overall financial assets, that's almost 64%, which is close to 12 trillions, and the residential real estate is 5.2 to 5.5%, or 5.2 to 5.5 trillion dollars in overall value, which accounts for 30% of the overall household balance sheet. And then you have consumer durables or financial assets, which is close to 1.2 trillion Canadian dollars, which is around 7% of the overall share. So the financial assets have definitely exceeded the non-financial assets, with notable shift from previous decades where housing represented most of the household wealth. Okay. Um, the other thing that we are noticing is that the um, top uh, 1% of the population basically, um, again, this is from PBO estimates, that there are close to 169,400 economic families in this top 1% of the wealth distribution. Okay. To qualify, a family requires at least $7.4 million in net wealth. Okay, this threshold was projected to increase to about 7.5 million by late 2024 as asset values continue to rise. Okay, so if you look at the balance sheet of these top 1% households, mostly they are invested in public equities, which is close to 30 to 40%, private businesses around 20 to 30%, investable real estate around 15 to 20%, and then the fixed income cash equities probably close to 10 to 15%, and the alternatives, maybe private equities, infrastructure, hedge funds, etc., which is around 10 to 5 to 10%. Okay, so this segment is also primarily client base for private banks. Okay, discretionary portfolio managers, family offices, and institutional wealth advisors, are definitely um, part of the top 1% um, group in terms of helping out managing their assets. Uh, but it's definitely a very small pool. But if you look at the top 10%, which controls almost 53% of the overall household wealth, um, they are mostly invested in house ownerships, and definitely they participate in equity markets. They have a large RRSP and TFSA balances, employer pension entitlements, taxable brokerage accounts, ownerships of incorporated businesses. So this cohort accounts for a large share of Canada's investable assets and is therefore the core market for the wealth management industry as well. Okay, and then we have the middle, that 40%. Okay, which where majority of the people lie. Um, they approximately hold close to 27.6% of the nation's wealth. So the wealth in this group is definitely concentrated on principal residences, workplace pension plans, RSPs, TFSAs, bank deposits. Okay, combined with this top um, decile, direct ownership of stocks, private businesses, and alternative investments is more limited. Housing equity typically represents the largest component of the household wealth. Now when it comes to bottom 40%. Now, the bottom 40% collectively accounts for only 3.3% of the total household wealth. Okay, this is definitely characterized by the fact that they don't have a high exposure to financial assets. Okay, they have higher debt related to asset, lower rates of ownership, home ownership for sure. Um, they have smaller retirement account balances, greater reliance on labor income. Okay, while this group participates in employer pension plans and registered saving vehicles to varying degrees, lower incomes constraints the ability to accumulate wealth, financial wealth over time. Okay, so we need to ask ourselves why wealth concentration is so much greater than the income concentration. So obviously there are several factors involved in it. One is that most of the households who are invested in financial assets, they are compounding their financial returns, right? If you look at past 2 decades, the compounding effect definitely plays a huge role. The higher wealth households have more capital invested in participating assets, and the housing appreciation is also part of it, which is earlier entry into the housing market has generated substantial gains for the long-term homeowners. Um, Most of them do have business ownership, which privately held businesses can represent a large share of household wealth. They have inheritances like in intergenerational transfer, reinforces existing wealth, and then they have tax advantage investing, which is greater capacity to maximize the RSP, TFSAs, and taxable investment accounts. Okay, these dynamics create this cumulative advantage that they have that is very difficult to replicate for households with limited savings capacity. Okay, so yeah, if you um, let's actually dive down to the fact that how age plays a role, because if you definitely look at the overall demographic sentiment from from Canadian household perspective, how does that play out overall in the overall wealth distribution? So if you look at it, based on the um, based on the age distribution, majority of the assets are going to be held by folks who are 55 plus. Okay, that's where I think the peak wealth accumulation is. But Canadian wealth distribution is definitely it's definitely a life cycle asset, right? Not just it's not just not the income outcome. Okay, households that age around 55 plus controls almost like 55 to 65% of the total net worth. The median wealth of the household age 65 to 74 is 6 to 10x higher than the household age 25 to 34. Okay, home ownership is definitely a primary wealth divider for middle class Canadians. Education strongly correlates with financial asset ownership, not just income. Immigrant households show initial wealth, but definitely faster conversions over time. Um, uh, After probably on the next first to second generational pace in terms of how they catch up with the wealth. So the wealth inequality is significantly higher within younger cohorts due to housing access constraints. Okay, so those are probably some of the things that you have to keep in mind. If you look at it from an age distribution standpoint, like from 18 to 24, the total net worth of these folks are probably be close to around 40 to 80K. 25 to 34, 250 to 500K, and then 35 to 44 is 700 to 1.2 million, and then 45 to 54, 1.2 to 2 million, 55 to 64, 2 to 3.5 million, and then 65 to 74, 1.8 to 3 million, and then 75 plus, probably 1.5 to 2.5 million. Okay, that's where um, you're looking at drawdown phase inheritance restructuring. But I think the peak is close to around that 45 to 75 age group, where you have the peak income, you have housing equity, you have peak wealth accumulation, deleveraged retirement assets. These are the things that dominate. Now, yeah, from definitely from if you look at it from an income bracket standpoint, obviously anything less than 40K is definitely a very low net worth. That's where investment behavior is mostly cash and debt dominant. 40 to 80K is almost home ownership. That's where the home ownership begins. 80 to 150 is around ETFs and RSP growth. 150 to 250K, you have diversified portfolios, and then you have 250K plus. You see private equity, real estate, tax optimization, etc. So the high income without real estate ownership almost always leads to below median wealth accumulation in Canada. So this is definitely different than what we see in the United States, which is not always the case, but definitely, real estate ownership is plays a huge role. Okay, in terms of wealth accumulation in Canada. So those are probably some of the updates or things that I wanted to talk about overall in general. Um, this is just a recap on in terms of how we look at the markets, especially we are concentrating on Canadian market for today and trying to understand how um, from a demographic standpoint and also from overall wealth distribution standpoint where we stand currently. Hope you like this, and we'll talk soon.